What if I told you that a single economic report just dropped that could send the US economy down two completely different roads? Seriously, one report has Wall Street buzzing, and it paints a picture of either a massive, booming recovery or a really dangerous illusion. Today, we're going to decode that signal and figure out what's really going on.
All right, here's our game plan. First, we'll look at the report that sent shockwaves through the market. Then, we'll break down the data to see what's under the hood. From there, we'll explore those two possible futures, the optimistic bull case and the pessimistic bear case, before we get into a potential investment playbook, and finally, what you need to be watching for next.
You know, for months now, the only word on anyone's lips has been recession. Everybody has been on high alert, just scouring every single data point for any sign of a slowdown. The mood has been tense, to say the least.
And that puts everyone, from the Federal Reserve down to individual investors, in a really tough spot. Is the economy actually fragile and about to tip over? Or is it way more resilient than anyone's giving it credit for? That is the question of the moment.
And then, this happened. The new home sales report for August came out, and it showed a jaw-dropping 20.5% surge from the month before. I mean, this wasn't just a little bit better than expected. This number absolutely shattered expectations and threw a huge wrench in that whole recession narrative.
So what is really going on behind that headline number? Let's peel back the layers here and deconstruct this thing, because how you interpret this report is absolutely crucial.
Just look at the scale of this surprise. All the experts, all the economists, they were forecasting an annual rate of about 650,000 new home sales. The actual number? 800,000. That's not a small miss. They weren't even in the right ballpark. The predictions were just completely off the mark.
And this right here is a super important detail. It's not just that more houses were sold, it's how fast they're selling. The supply of new homes on the market just tanked. What that tells you is that demand from buyers is just dramatically outpacing how fast builders can even build the houses. That's a hugely bullish sign. And get this wasn't just, one hot market in Florida or Texas skewing all the numbers. Look at this breakdown by region. A mind-blowing 72% jump in the Northeast, almost 25% in the South, and really solid growth across the Midwest and the West. This is a nationwide trend, not some regional fluke.
Okay, so this brings us to the first path, the first possible future. This is the optimistic one, the bull case, where this incredible housing rebound could be the key to the whole economy sticking that perfect soft landing.
Now, let's just make sure we're all on the same page with soft landing. It's that magical, perfect scenario where the Fed manages to bring inflation down by slowing the economy, but without crashing it into a painful recession. It's the tightrope walk everyone is hoping they can pull off.
And in this soft landing world, a healthy housing market creates this amazing positive ripple effect. It tells the Fed, hey, what you're doing is working. It creates more construction jobs, which means more people spending money on furniture, appliances, you name it. And that, in turn, is a fantastic sign for economically sensitive stocks and commodities.
But there's another way to look at this, a much more pessimistic one. What if this amazing report isn't a sign of real, durable strength? What if it's just a temporary sugar high before a crash?
This quote really nails the bear case perfectly. The big fear here is that maybe a little dip in mortgage rates just caused a temporary rush of buyers who are waiting on the sidelines. But the underlying problem, the fact that homes are just way too expensive for a lot of people, that hasn't gone away. And it could be about to slam the brakes on this whole thing.
So look at how different these two outcomes are. In the bull case, the Fed is feeling good, they can ease off gently, and markets go risk on. Investors are loving stocks. But in the bear case, the economy sputters, the Fed has to slash rates in a panic, and investors flee to the safety of bonds. Two completely different worlds.
Okay, so you've got these two possible futures sitting in front of you. What do you do? Well, the author of our source material actually makes a call and lays out a pretty clear investment thesis based on this data.
The primary thesis here is to side with the bulls. The big takeaway is that this report is strong enough to suggest it's time to increase your exposure to the parts of the market that do well when the economy is strong, especially things tied to housing. So here's how that strategy breaks down. For stocks, the idea is to overweight cyclicals. Think homebuilders, car companies, stuff that thrives when people feel confident and are spending money. At the same time, you'd be more cautious on bonds, since fading recession fears aren't great for them. The thesis is also bullish on industrial commodities like lumber and copper, and on the US dollar.
Now, of course, you can't bet the farm on just one report, right? It was a blockbuster, for sure, but it's still just one data point. So the key question is, what do we need to watch to see if this bullish story holds up?
All right, here's your cheat sheet. In the very near term, keep your eyes glued to the next round of home sales data and weekly mortgage applications. Listen very carefully to what the Fed says at its next meeting. And then, over the next few months, watch building permits and listen to what the big home builders say when they report their earnings. Those are your clues.
And so that brings us to the final, crucial question. We're at a fork in the road. This one report has laid out two completely different futures. Now, armed with the data and the signals to watch for, the question for all of us is this a real, sustainable recovery, or is it just the last hurrah? Which path is the economy actually on?